You will have always more security on a decentralized network than on a centralized. Nobody can shut it down.
That was part of the point of it, of cryptocurrency when it first started.
The transparency is increasing in the blockchain because the anonymity is going away.
It's all open source, so there's the security in that as well, as opposed to the complete opaqueness of centralized banking systems and monetary and fiat systems as well.
It becomes a centralized authority, but based on the blockchain. But it will be complicated to go from crypto to fiat back and forward. The easiest way how you can regulate everything is just the transparency between crypto and fiat. It breaks the whole idea of Web3.
Hi, and today I'm delighted to have on Confidentially Yours, Pavel Salas.
It's a pleasure to see you here.
Excellent, good to see you. So, the first thing I always like to do is just to find out a little bit about our guest. So, could you give me a potted history of how you've got to where you are? You know, what's your trajectory in just a few short paragraphs?
Okay, we'll try to take it to keep it short, to be honest. Okay, I started more than 15 years in the fintech industry. Okay, let's say in finance part first. I was working in different FX brokers or forex brokers in the beginning, starting from developing regions as Latin America. Then I moved to Europe, Russia, and CIS, working already in more institutional banks. Then I
So
moved
this is
into
all foreign exchange, foreign exchange.
Forex
Okay,
exchange,
yeah.
Then I moved to a company, it's more like a fintech in the same zone. It's like a fixed CFDs and some additional instruments that's called eToro. They went public
CFDs? We got to go through all of this.
Okay, CFDs are contract for differences. The difference, let's say, it's quite similar in an instrument as a forex, but with some tricky things. Let's clarify it. Then I moved to eToro. And we were working there on bringing the first institutional, let's say, broker with license to bring crypto to trade as a CFD precisely. It was Bitcoin in 2015. Then it was Ethereum and other major parts. After that, I moved to another fintech company that wanted to generate the biggest liquidity possible in the market, crypto liquidity in the market, aggregating different exchanges so that persons can trade with the best price and easy entrance, because at that moment to enter into the exchange was complicated, to buy crypto was complicated, things like that. After that, I moved into an L1 solution protocol that's quite similar to, let's say, third generation of blockchains based on WebAssembly virtual machine. Like, we can dig that later on, but if you want about that. And after that, I actually, last year, I left the company. Last year, I was consulting different startups in terms of crypto, Web3, a little bit of AI thing, and decided to build a new project that's called SocialWisdom. That's based more on the prediction side or prediction market side. And it's fully on-chain project, so you can have the transparency of what's happening inside the commission
definitely want to get
distribution.
into that as we go
Everything like
through. That sounds fantastic. Excellent. And that kind of brings us up to today, right?
Yes, that's
excellent.
Absolutely.
And the other thing
Really short period, but that's so today.
Okay, now that's good. So the other thing I like to understand is, how techy do you, so on that sort of spectrum of really, really techy, programming every day, low level stuff, through to sort of executive or management, where do you see yourself on that kind of spectrum, do you think?
I was more on the management side. I'm not really taking part of programming. I am getting a bit more programming now thanks to AI and a lot of stuff that you can be doing now. So I had to learn a little bit more of Python and things like that to tweak some of the things so it would be faster to do it inside the code rather than just talk with AI sometimes. But I'm more on the management side.
Okay, brilliant. So I think we need to go back to some of the stuff you said earlier on. So you talked briefly about CFDs, which I think you said a contract for difference. Is that something like a derivative instrument, a sort of financial instrument for derivatives and those sorts of? Am I using the right words here at all?
Yes, it's a derivative. The idea is that this instrument was born as a concept or the option. So you can first of all leverage the basic asset on top of that. And secondly, you don't need to make the delivery. So if we talk about futures, the options, for example, then in the options, you don't have to have the delivery, just a price speculation, but the specific formula that's done there. In the futures, when you buy a future contract, you actually have to deliver it.
Okay.
But nobody practically delivers it, they just settle it. But the idea was that in terms when the future should be delivered, the CFD was an instrument that allows you to be perpetual, like a future that never ends, and it doesn't have to be delivered, but it has to be settled in the basic currency. Meaning, if we want to trade gold, it will be traded against, let's say, USD. So you buy it at a specific price with USD. You wait till the price go up or down, depending on what you want. Are you shorting? Are you buying? Are you winning? Are you losing? And then you have to close the position and come back once more to USD. And the difference, the delta that you will receive, either if you were correct in your prognosis and you actually win the money, you will receive this delta. If you are losing, you will receive the minus the delta that you lose.
Well,
And then
okay,
you have
that's
leverages and all these things that actually is pretty common into the Forex market, because obviously the fluctuation of the price is really small. So you need leverage, and there is a lot of digits behind the normal ones that we're using to trade that. So all this stuff is like quite similar to that.
okay. I kind of feel like I almost understand it, which is fantastic. So that's brilliant, and I'm really glad there are people who do understand it. So you use gold as an example here, but you've done a lot of stuff in cryptocurrency. Uh, is it similar? Can you do the same things? How are there differences?
Um, it's quite tricky now. Like in our realities now, it's quite similar how it's done, and that's why a lot of brokers now have it, and all the stuff, even leveraged ones or small leveraged. But when we were launching that with eToro, it was a tricky thing and complicated, because in 2015, it was, first of all, it was complicated to buy Bitcoin. You either have to buy it for the miners, then for normal common people, it would be local Bitcoins, peer-to-peer transaction stuff. And so eToro had some bought, some was mined, and we have specific amount of Bitcoins that was like a hedge or a position that
Okay.
allows us to give the option to other people to trade against that. And obviously, we get already some institutional options to buy miners, and so we can always be overhedged in our positions, so people can trade this instrument, Bitcoin against USD. And if he is winning, then in certain moment, like close the position, we have the money to pay out. So we always had more Bitcoins on our balance than actually the traded amount. That was the way how we can, let's say, secure
Yeah.
that the broker will not get bankrupt, because one of the biggest problems that happens is if you sell derivatives and you don't have the hedge position or over collateral stuff there, then you have problems. And
Things can
when
go
people
very badly.
withdrawing, yeah,
Indeed, yeah,
exactly.
sure. Okay. And this sounds very much to me like the sort of stuff that AI gets involved with, or people put AI onto. Has has the advent of AI over the last few years changed this world much, or is it the same, just a bit faster, would you say?
It's going there. It's tricky in the way that if you use specific models like the ones, there was an experiment, I think, like a month ago or 2 months ago, not sure about the time, but you can actually check it in the internet, where they gave different AI platforms like 10,000 K in USD to trade. And we had ChatGPT, it was Grok, it was actually, I think, obviously it was DeepSeek, it was one of Alibaba ones also, and it was another one, I don't remember exactly, like I think Anthropic, they use the cloud to do that.
Okay.
And actually, the more, the interesting thing was that the more the AI model was like mimicking the people behavior, or
Yeah.
in talking and also in doing, they actually trade quite similar to people's ones. So the best was
Okay.
actually DeepSeek in terms of that, of the trading stuff. The other ones were actually losing money. I think the worst was Grok or yeah, the worst was Grok. The next was ChatGPT. Then the Chinese ones actually was one of the best to trade. And we see that the common models are a little bit complicated because obviously what's happening when you're doing that, there's a lot of information how they're learning on top of that. And people start putting some safety mechanisms on that. And that's why it became sloppy in terms of markets. But if you use a specific agent to train it, and what's now a lot of people are trying to do that.
Yep.
You take the basic model, you start training in a specific data, you start giving them specific setups, you start learning about that. Then they became more and more sophisticated to do that. And then we're going from something that a lot of people are predicting now, that we will be going from one agent to do everything to specific agents to do specific things, and then maybe another one that will be aggregating that. So it will be
rather
easy
than the whole generic AIs, actually specialism makes a lot of sense in this context. That
yes.
I've got the details of that. If people want to look at that, and we'll put a link in the description as well. But it's https://n-of1.ai. So NOF1.ai, I think, is that position tracking, I think, with the $10,000 experiment, if people want to follow that. Excellent. So the answer is, as with pretty much everything these days, AI is taking over or beginning to have a significant impact. And we're only going to see more of that. Okay, I'd like to go back actually to some of the other stuff you've done on the management side. You've been involved with scaling up some early stage blockchain communities and projects and growing them across diverse markets as well. So this is kind of the opposite of the specialism. I'd love to know how you approach that. What any tips you've got, stuff that you've seen work, and even better, stuff that you've seen not work. I sometimes reckon that bad examples are sometimes even better. So yeah, any thoughts on building communities, particularly across diverse global markets?
Interesting question and trick at the same time, because it depends a lot on the product that you will be selling or positioning in the market. If we're
Give us
talking
an
about
example of one that you think is a good example, a good or a bad example, frankly.
Okay, let me maybe give a little bit like an overview of different options that you can have, depending of if you're doing something like Web2 more base or like SaaS base. Then you have a lot of options, traditional options, like you have Google, you have Facebook, you have different type of advertisement that you can give.
Yeah.
If you're going more into Web3, then you're like narrowing a little bit more the things there. And you have more focus on Twitter stuff, you have more like Reddit things, you have more influencer stuff there on Telegram channels. But overall, if you want to grow, like it's always evolving. And if you want to grow now quite a big and fast community, the best way that you can do is move forward video content, a lot of influencer stuff, TikTok, Instagram, YouTube, short reels. Even if you do, for example, like a podcast that we're doing now, then you cut into short reels and you start promoting that. If you get some catchy things, that will actually give you the virality, because one of the biggest problems with virality is that you never know what would actually work up. You have some assumptions that this could people could like it, and then you have to test it. But the thing to get there is to do a lot of stuff that you think could be interesting, so people will start choosing, and then you see the result, like the best result, that you see something like this reels is working or this scenario is working. Okay, great. Take it and start replicating it, making something better, but replicate, and you will get the point
it's kind of like
your audience.
Breeding to a genetic stock. You don't know what's going to be the best thing until you start doing it, and then you keep reusing that and improving it. I think it's really interesting to say that the sort of Web2 SaaS old world, well, I've been around for long enough that that's kind of the second or third generation for me, but still, that's the old stuff, is quite different to the Web3 world. Is that, do you think, to do with sophistication of the market, the specialization of the market, or the age of the people in the market? What do you think that is so different?
I think it's both. First of all, it's the age of the people that are like the consumers, And second, it's also the age of the people that are doing marketing in Web2. Just because when you're like in a company that's already like a big company or established company, mainly what people are doing is like they're looking what the competition is doing and trying to do the same. And they're competing in the budgets and practically in some slogans and trying to positioning, but they don't try to open into new instruments, or rather want to do that. And that's why they're like doing the same and the same cycle. And you'll see that they practically now they're going like they start using a lot of YouTube, because some of the products, especially that it is B2C or B2B, they start doing a lot of tutorials how you can apply it, and people start getting that information there. But they're still less using influencers in terms of TikTok or Instagram, for example. Even that, I have several interesting like ideas. I saw guys that actually promoted a lot their academies, teaching different stuff through TikTok videos, and then the people will come and they monetize and
Sure.
building the funnel this way. So
Sure.
it's a lot of both, like audience and people that inside. In crypto, as you were like always like lacking of a lot of instruments, because like you're not regulated, you don't have a company, you don't want to pay with this card or whatever.
Yeah.
And so they had to narrow it a lot into, let's say, free stuff that could be done, like obviously not free when talking about influencers, but the idea is this one that is not regulated. So you can arrange with them some deals. You can pay them in crypto the same way.
Yeah.
So they can talk about your project. They can give a lot of stuff. And obviously, the best way how you can write your project is if somebody else will talk really good about your project. And if
Yeah.
this
Of
somebody
course.
else has a huge community,
Then
then
you benefit from that. Okay, that
exactly.
kind of brings me to the next part of the question, really, which is we've talked about how do you sort of grow it, but that's slightly different to go to market. How do you think that sort of next bit of it's bringing something to market is different from the Web 2 world over to the Web 3 world?
I think that in okay, there was a huge gap in Web 2 that and Web 3, and I will just explain how it's closing now.
Yeah.
But previously in Web 2, people already get so sophisticated in terms of how they use the applications, the commodity, the ease of use of that, how it's like intuitive, good UX, good UI. And that was really already huge gain between different companies, like to tweak some small things so it would be much usable, like much user friendly. A lot of customer support. People will answer you practically the same time 24 hours a day, 7 days a week. And then in Web3, there was, let's say, from 2000 up to, I think up to like 3 years ago, it was sometimes a mess regarding the visualization, the UX, the UI part, the
So
customer
even
journey.
even early 2020s, okay, still
Yes,
a bit
even
of a
that.
mess.
Like this, the last bull run that we're having now, and let's say with the even that already starts bringing a lot of thinking about the customer, because the competition, the amount of people that starts going inside the market became to be bigger. And when you want to carve new users, you need to give them something that they're used to. Previously, if you want to go to crypto, you had to learn how to use a lot of wallets that were not intuitive. Sometimes I remember even the Ethereum wallet that they have to have a note there. You have to wait a lot to send the stuff, to send a transaction. It was
Yeah.
sometimes half an hour. Like it was a madness. Now you can use Zero and you can use MetaMask. You can use a lot of wallets that are
Uh,
simple and easy.
I think that's really interesting because I'd kind of assumed, if I'm honest, that um, because Web 3 was kind of much more newer and much more modern, that it would be actually more sophisticated in how it's bringing things to market. But it sounds like it's kind of the opposite because it was kind of a fairly technical and geeky market. You didn't need to do that to start with. And actually, there's been a lot that it can learn and has been learning from the Web 2 world, which just had 30, 40 years of trying to get his head around all of this. Is that a fair way of looking at it?
Yeah, exactly. In the beginning, practically crypto was for geekies. So everybody that was looking something, they were going to the GitHub, checking the code, checking the smart contracts and all the
Yeah.
stuff. And let's say now when the hamster combat became in Telegram, like it was practically everything Web2 based because they didn't have anything Web3, but everybody was like talking about crypto because they were learning things and they were doing and they like the UX UI and all the stuff. So it's more about, if we're talking about mass adoption, then we need to give the utility and let's say the experience people are common to, it's like they are used to and they want to do it. And obviously, before for the programmers, and I actually when we have working with a lot of them in when we're talking in Gear Foundation and one protocol, then they use a lot of code and they basically common code lines. They don't use a lot of other stuff. When they want to decode or check a program, they go to the idea, so check it there, run code instead of like nice interface. They'll say, no, I don't need that. That's easier. That's faster. That's I say, yes, for you. But when you come a person that doesn't know what code is, he sees that he doesn't understand. He doesn't have any clue of what doing. He's just, thanks a lot. Maybe later we'll have some time to review it. And this is one of the biggest issues.
Yeah, that makes sense. Obviously, you want the more people are getting involved, the higher the liquidity, and therefore that's a good thing. So you want lots of people involved. And I think there was a kind of assumption, maybe even up to sort of 5-7 years ago, that the geeks would rule the earth. But particularly with AI, we're seeing that the capabilities available to geeks are actually available to much more broadly, right? Which means that there's options to bring those people in, and therefore you need to make it as easy to use as the things they're used to. Is that what you're saying, or have I got it a bit wrong?
In certain way, yes. I would say it differently. I don't think, with all the respect to the geeks, I don't think they will rule
I'm a
the
geek.
world.
You can say what you want about me. That's fine. I don't mind.
I don't think they will rule the world just because they're lacking part of social integration and social communication. A lot of them just want to be inserted in the idea. They think this is the best. So what came after sliced bread and nothing else, what they're thinking can change it. At least there's another person that can show additional code that could be even better. And how to communicate this product, how to make it useful for a lot of mass adoption, they're lacking that. That's why now a lot of projects that, if we see also the retrospective of Web3, in the beginning, a lot of projects, all the founders were developers. Now we can see that a lot of new projects, we have a lot of success with customers, with the volumes, like you will see already not developers, you will see already product guys, or at least one would be product, see marketing people there, because they're hiring the developers to do what they need to be done, but they know what exactly they want to give to the final customer.
Yeah,
So people would be
yeah,
easy
that
to
sounds
use.
a really, really good way of looking at it. I read something very recently saying pretty much the same, that, the founder CTO isn't necessarily the big power behind the throne anymore. It's actually the product and the marketing people, because it's easier to make the stuff happen and actually bring it to market, and making sure the user experience is right is really important. So
I can even
speaking,
say more. I think that
please.
one of the biggest mistakes, if we can see retrospectively into different crypto projects, is when the CTO, or the main developer, the guy that will be developing the code and writing a lot, will be the CEO. Because first of all, the CEO is a position where you have to build building teams, you have to put them together, have to connect stuff.
Yeah.
And when you put a CTO, a guy that wants to code, especially if it's a true one that really wants to be coding, and you put them to speak, and you put him into the conference, he becomes so stressed. So he's not doing a good job there. Plus, he's not doing a good job in the coding part. And that was a lot of mistakes. So when you take him away and you put him in the position that should he be, like coding the information, building the project, like how he wants, but then you put a product guy near him saying, okay, that's great, but okay, we need this for the customers, because what you think is the great for them, it's at the end of the day not the great. Like we check with customers and we understand that this and this should be done.
I absolutely agree. Yeah.
And then the project starts going fast. That's why you can see Hyperliquid, for example, like rising as a rising star up of all the trading and DEXs, just because they put something that was easy to use. It was like common. It was people get used to that. You had the option of the centralized exchange practically mimicking completely on the DEX. They
Yeah.
still have some problem with decentralization, but look, it's there and it's easy to use. It's common how people agreed to that, and you have the transparency of the blockchain.
So we've been talking a bit about being a geek, and the particular type of geek I am is a security geek. And so one of the things I always think about is security and privacy and stuff. And I'd be interested to hear your views on where privacy sits in a in a product strategy. We always say don't try and build it on later, but do you think that the Web3 world has got its head around doing privacy early on? Because I know decentralization and privacy are actually often considered very important parts of each other. But do you think that the world has really got the privacy and security front of mind yet, even in Web3?
It's a great question because it's actually sometimes is ambiguous. If we're talking about Web3, sometimes from one point of view you have like privacy, from another point of view you have transparency, and it's always like a thin line depending of what you want, which project you are building on, and how you want to do it. If we're talking about, for example, privacy in transferring money, you have Zcash or you have Monero. You cannot trace anything. You have just like, or you have some mixers on Ethereum, like Tornado Cash was there, so that you can like that's privacy in certain way, because you never know who sent to whom the money, and otherwise in the blockchain it will be transparent. Especially now that we're seeing a lot of regulatory stuff coming in, in Ethereum, for example, a lot of addresses are really mapped up, so you can check Chainlink or Crystal, and you will see practically some of them have already the name near the wallet of the person. So there is not privacy practically there. Whatever you will do, they will map you quite easy. This goes to the exchange, this goes to the organization. If you want to go here, who took the money from this exchange, and things like that. The transparency is increasing in the blockchain because the anonymity is going away, because of a lot of, especially in the really used blockchain like Ethereum and some on Solana. But the privacy is another interesting thing, because when we're talking about privacy, it's mainly the privacy of the information of the users, because a lot of Web3 projects, and mainly if we're talking about core Web3 projects, they should be open source, meaning that everybody can check the code and see what's happening there. And then if they want, they can take this code and replicate it, whatever you're doing. So the main race in Web3 is that either you, as a person with an idea that is building something, you're all the time building and building something new to be ahead of other people.
To be ahead of the curve,
or you build a great idea that other people are saying, okay, I want to collaborate, I want to help him to build something, and instead of forking you and changing it, they're helping you, giving new comments, new ideas, and maybe part of the code so they can build together the project.
So let me go back to something you said just a moment ago, because I think that's really interesting. You talked about how things like GDPR and other regulations are having an impact on improving privacy. But at the same time, I know there's a kind of counter flow where we're having regulations trying to ensure that we've got more control over what's going on from a sort of government tracking point of view. Do you see these in tension, and is it something that the Web3 world is dealing with well, or is it struggling with it?
I think that we're just starting to see that. Europe is actually becoming quite tight in this idea. The US a little bit like now giving the slack to that. But you will see one of the biggest problems, for example, of any Web3 project, especially when we're talking about like you have to either have to do QIC to everybody, and that was
What's
something that was
QIC? Just let everyone
know your customer, meaning you have to take you have to take the documents, you have to understand who is this person,
So a
because a lot
passport
of
or an address or something like that.
exactly. So I have to know who he is, where he's from, because previously Web3, the idea is there's no person behind, it's just a wallet. So you actually didn't know where he's from, like what
That
he's
was part.
doing.
That was part of the point of it of
Yeah,
cryptocurrency when
exactly.
it first started. Yeah.
And we're talking about, let's say, we're talking about DeFi or decentralized finance. So you want to swap something, or you want to put your money to lend it and receive some rewards from that. It was also the same. You just put your money, it's a wallet, and you receive your money and you withdraw it and you do whatever you want. And now there comes the problem that if, and Europe is talking about that they want actually to ask the DeFi protocols to do QIC on the customers. And here comes one of the biggest, let's say, dilemmas in this world, because officially, when you're launching a DEX, it's like, let's say you and me decided to code a DEX.
Sorry,
We're
let's
launching it.
stop. DEX, decentralized exchange, right? So it's like
Yes,
a
exactly.
bank, but it's not all in one place. So when you're launching one of these, let's go back to that thread. Yeah, sorry.
Okay, let's say you and me decided to launch it. We put
Okay.
the code together, we upload it into the network, and then it's living there. Like, it doesn't need already from us to keep on living. But then what we want to do, let's say we want to improve it, we put some, and there's different structures how you can do it. You can do a DAO, for example, for decision making on this stuff. So it's, you give
DAO
some.
is a
DAO is a decentralized autonomous organization, which actually is an analogy of, like, in corporate world, of a company, an LLC
but
or
it's
C corp, whatever you want it.
decentralized and yep. Okay.
Yes, where instead of having shares, you have some tokens, or you can have an NFT. Doesn't matter.
Yep.
But it's and so the people, let's say, in the traditional way, you have some tokens, and according to the tokens, each token is a vote that you can give to how the organization should be developed.
Perfect.
So we built that code, and this organization is just helping to put, like, if somebody wants to improve it, we're voting yes, we want to put this improvement, and it's approved. If not, not. So then we have a new point that if this is a decentralized organization which is managed by 100, let's say, what different wallets that have different tokens on top of that.
Yeah.
So when comes the government and says, look, you have to put QIC there, the question is to whom? So mainly they come to people that that built in the beginning this protocol, and they say, okay, as you build it, you have to improve these rules. And officially, like in this world's happening, if you start building it, you mainly will be building it, you mainly is one of the
Yeah.
people of the DAO and all the stuff. But they're trying to enforce you to do something that actually should be voted by everybody.
Yeah. You
And
can't ensure that just because you wrote the code doesn't mean that people are going to accept this new version of
exactly,
code with the requirements from the regulator or government. Yeah.
it's practically should be seen as like an outsource. And say everybody that is writing the code and then uploading into the network in the open source way, it's practically like an outsource from the community that he still's there, and some the protocol pays him some money to upload, to keep on working on that, but
Yeah.
he doesn't have the option of, like, say, okay, I will enforce that, because then it goes against the rule of decentralization and
Yeah.
becomes a centralized authority, but based on the blockchain. So this is one of the biggest dilemmas that's happening there. And obviously, in a lot of protocols, the team that started the project, he has the biggest amount of tokens. So when the government comes to them and say, "Look, you have to do this, and this," and I don't care that you're a technological company. If not, you will go to prison. People say, "Okay, let's try to see how we can implement that."
Yeah.
Or how we can at least ensure that people from the US will not join here, or people from Europe will not join here. And here starts, let's say, it breaks the whole idea of Web3. So
Yeah.
now the whole concept of Web3 and the decentralization and the centralization and the government and all the stuff is like conflicting, and they're looking how they will go out from that. But it's really complicated stuff. The same go for GDPR or the customer's data, for example, like how you can put this information in the decentralized way, where you will put it. You put it on the servers where? If you put it on the servers of your company, you are already practically becoming to be centralized. If you're
Do you
putting
have
in IPFS, some of the data, even if you, let's say, put it into like encrypted way, it will be everywhere. Like you cannot ensure that this
who
data
don't
will be
know,
just here.
IPFS is a distributed file system across the internet, right? Just so.
Yes.
This is part of the problem when we're talking about stuff that we know about. It's so easy just to come up with things, and I try and remember that not everyone knows all the stuff. I certainly don't. So, do you have any predictions for where this is going to go in the next maybe 2 to 5 years, or is it just too cloudy?
It will depend a lot on what will happen in the regulatory stuff. Like if they will tighten it more,
Yeah.
then mostly sure we will see that a lot of, like, we'll see the split like in the beginning, but really like tough. We will have the crypto, especially anonymized ones like Monero and Zcash, will actually start surging a lot. You will see a lot of regulated products, especially the most used ones. They will become regulated, and you will have a bunch of not regulated, really true DeFi protocols where you will not know even the founder of that, just because for security reasons, and people will be using that more like a darknet idea or the pirate stuff and things like that, just because the regulation could tie it so hard so that you will still be able to use it, but it will be complicated to go from crypto to fiat back and forward. Because as I will say, the easiest way how you can regulate everything is just the transpassing between crypto and fiat, and then you will have all the information you need. And I think the government will go this way.
I don't think we've explained what fiat is. Fiat is currencies that could have backed by government, like the US dollar or the pound or the euro, those sorts of things. Okay, brilliant. So we talked a bit about trading and AI for trading and those sorts of things. But one thing we haven't really looked at, and I know is quite different in the cryptocurrency world and Web3, is smart contracts. You mentioned WASM, WebAssembly, which people probably use and don't know about it because it starts off in the browser. In fact, Unity is based in WebAssembly. It has a big gaming platform, right? But I'm assuming that when we're talking about smart contracts and WASM, it's a bit different. Maybe you could just briefly explain what a smart contract is first, and then we can maybe look at how they're used and why they're important.
Sure. The smart contract is a way how two persons or let's go. There are several entities that are playing inside the blockchain. Let's say that. One of the things is a wallet that actually is represented by a user. So this is like an encrypted thing that if I want to make a transaction with you, depending on a specific agreement that we want to have, so we have to put it into the blockchain. It's like an electronic contract between two parties that have a specific structure and a specific outcome of what will happen. And when it's happened, let's say we put some money there, and when it's happened, the transaction is released to the person who has to receive it.
Okay, so it could
It's
be
like
something
an escrow. It's like an electronic escrow, let's say like that.
Okay, so it could be something as simple as England is playing Spain in the World Cup, and I put in 10.01 Bitcoin, and you put in 0.01 Bitcoin, and into the smart contract, and it looks at the result of that from an oracle, which gives that information, and depending on who wins, if England wins, I get the result, and if Spain wins, you get the result, minus presumably a cut for the work that's been done in a smart contract. Is that a very basic? But you could do a lot more complex stuff there as well, I'm guessing. So tell us a bit about the new stuff that we can do beyond just who wins a football match.
Yeah, actually this one is the basic one. It was for what it was used in the beginning, so that you can do this agreement. And the most important thing there is, doesn't matter, I like it, I don't like it, you like it, you don't like the result. If we agreed on that, the transaction would be done.
Because it's a contract, but it's actually set into code. It's not just written down, and we put our stake in, and it just goes through. It's automated. It's based in code. Okay, brilliant.
Yes, exactly. So, and this was an idea of Vitalik Buterin, actually Ethereum was founded with this idea because previously he was working on something that was called the Color Coins protocol that was trying to put on top of the Bitcoin network and trying to use it as a decentralized ledger, meaning like a decentralized database where you
Yeah.
can put some information that's not just sending you a transaction, but to put, let's say, to this transaction to aggregate specific utility. It was really complicated. It was able, the product actually Color Coins exists. They did it, but after that, Vitalik understood it was complicated, and he wanted to put an additional layer that actually was able to build these smart contracts. And they built it. And the basic ones was actually for this, for if I want to put a coin. And that's why, for example, the boom of the ICOs of the 2017, 16, because it was quite easy to make a coin on top of Ethereum. You just build a token, give it a name, and you can start collecting money based on that coin.
So rather than basing it on a currency, they base the currency on top of it, if that makes more sense.
Yes, exactly.
Okay.
So that you can build a lot. Because, for example, on top of Bitcoin, in that moment previously, it was impossible to put a coin, like to build a coin there, how we're building now. So actually, if you want to build a coin previously, you have to fork Bitcoin and to build your own blockchain, your own token for that. And now you have a lot of tokens that are built on top of Ethereum, Solana, whatever.
Sure,
All the meme coins, for example.
Yeah.
Free clicks, that's done. This is also obviously smart contract, but everything that Solana was done during the last 6 months, all the meme coin stuff, and just easy free clicks on the front end, builds a smart contract, generates a token, and you can sell it.
Okay.
And obviously, the whole concept of the smart contract revolutionized a lot the Web3 space. So it began to generate more sophisticated things like lending protocols. For example, you put some money inside the smart contract, and you say, okay, I put 1 Ethereum here. This Ethereum now costs 4,000 USD, let's say, just for sake of math.
Yeah.
And I want to take a loan based collateral by this Ethereum for 2K in USDT. And this smart contract gives you this 2K, and it's always controlling that the amount of money that you gave as a collateral will never be below the money that you are taking and the percentage that you have to be paying. Once it's there, it will automatically liquidate and take this money and give it to another person that gives you the USDT to take the loan, because all these protocols work like somebody gives one coin, the other one gives another coin, and then they receive percentage for giving this money. This was like the second generation of smart contracts when the DeFi actually start rising up, the decentralized finance. And then now you will have protocols like ICP, for example, that they do really complicated smart contracts that could work even on different blockchains to mimic the transactions and maintain all the state on top of what they're doing. So you can build things like on-chain order books, meaning everybody's putting their order there and it's chronologically all the time checking what's happening. Then the transaction comes and executes specific order and not everybody there. And it's not like one by one, because previous smart contracts is like, if I'm putting one information or piece of code or piece of money here, then this should be executed first. Now you can check in parallel what's happening. It's complicated stuff, but it becomes really interesting and really useful in a certain moment, because we need to understand that blockchain, the computation capabilities of blockchains are quite limited. And that's why a lot of things were building on top of that. And we need also to understand one thing, that the more decentralized is a network, this not slower, but let's say centralized network will always work faster than decentralized. Centralized network will always be cheaper than a decentralized one. But the security, you will have always more security on a decentralized network than on a centralized one. Because when you're talking about the centralized network, nobody can shut it down. Like, it's really complicated. You have to shut down everybody who has at least a node or a validator to put the network down. And as it's like spread a lot, for example, to shut down Ethereum, you have to shut down huge amount of people that are actually maintaining the node there.
And we've also already
It's
talked about the fact that this is all open source. So there's the security in that as well, as opposed to the complete opaqueness of centralized banking systems and monetary and fiat systems as well. Okay. So,
Yeah, and actually, one of the things that was really common and started to become really common in Web3, and I don't think that it went to Web2 yet because everything is closed, but the idea of audits, but open audits, so that people have, like, you have Immunify, for example, you put a bounty there. If you hack me, my smart contracts, I will pay you this amount. If you, for example, 1inch and Uniswap, they practically always have the amount that if you manage to hack some amount of money from us, we'll give you the 10% as a reward. Or if you
it,
can code
it's a
this
really
code,
interesting
we'll give you
model.
like 1 million of USDC
Yeah.
for that. Like, do it.
Yeah. It's a really interesting model because bug bounties have been a thing in open source for a while, but when you're actually basing, monetary transactions on it, suddenly they become much more valuable. And because of the decentralized nature, they also benefit more people. So there's a bigger stake to put in. So this is bug bounties to the max, as it were. I think that's really interesting. So what
And
I want to,
plus, one of the biggest things of that is that you can, like, if you're a hacker, you see that there is an exploit that you can do it.
yeah,
And there's two ways. One, you can do it, take the money, and then try to hide that people will be looking for you, or just say, okay, this is the exploit, you can do this, and receive huge reward for
oh
that,
yeah, yeah.
and have no
And
problems,
and
and you will
kudos
be
as
like,
well.
yeah,
You're getting reputation, which is good for you as well. Absolutely, uh, that makes a lot of sense. One other thing that I'd like to talk about is we've got these smart contracts, and we've got the idea of basic trading bots. We've talked about this, but if you throw smart contracts, trading bots, and the new generation of AI all in one thing, what happens? What does that look like? Where are we going with that? Because I'm sure people are doing it.
yeah. And there is a lot of experiments now of doing that. It's still the beginning. AI is evolving a lot. We can see from a year ago or 2 years, like with the
Yeah,
ChatGPT, to what he's doing now. It's like totally mad. Um, I think one of the biggest things, and that's why we're going back to the idea of the small agents, specific agents to do something.
so agentic AI.
They
Yep, yep,
Yeah, they will show you or give you the capability to put some of them on top of the blockchain, for example, so he can start governing some of the tokens, do the transactions, make the trading. The point is that you'll need to make it quite small so it will be fast and cheap to store. Second, what I see now from people that are working especially on the trading side, on the social awareness side, on seeing what's happening on Twitter, who is trending, what's happening, which tokens
yep,
could like to have this prediction up front of just the price. What they're doing is building a lot of small specialized AIs, and then they're building like a system. You have a small specialized AI that, for example, is scanning just the Twitter for new hype news. Then you have another one that's scanning Reddit. Then you have another one that's scanning the volume and the prices on
yep,
CoinGecko, for example. And then you have another one on top of that that already has a specific scheme of balances all the information that's coming and giving you like a mod one size, okay, saying, okay, look at this and this token because by these parameters it's working good. And then you have a third one that already says, okay, I would suggest to put it into the watch list and analyze what's happening here. Or let's wait for the next price to check because I have another agent that
yep,
already has the signal. He's not thinking about, he just received the signal of saying, look, you have to check these tokens and the prices and the volatility, what's happening. And then you have them working, and there's another agent that's actually just doing one thing. He's just, when he receives these tokens are really moving how we want it, he'll already take a decision, either trade or not trade, or
yep.
just give a signal to a person, view these tokens, they are trending.
And then you can make a decision. So, what something that I wonder about is, again, we've talked before about the importance of open source and transparency here. Most AIs are well known. They're notorious for being closed source. And in fact, we're seeing some of the creators of them intentionally putting controls or weighting them in particular ways. Is there not a tension between this closed, opaque, non-transparent AI world and the open source uh, Web3 DeFi world?
It's a really good question. And I think it's still, as a lot of developers are still looking at the AI agents more like something to play with, but not like a serious
Yeah,
competitor. So it's not there yet. But I think one of the biggest ethical dilemmas that also will have is that you don't know based on which data they are actually taught. And the next biggest thing, you don't know if somebody at certain moment will start, especially as it's centralized,
uh,
somebody will start putting specific comments to be more accurate to do this. Let's say, for example, uh, it's known by everybody that Google have the algorithms. If you pay some advertisement or pay some ACO to them, they will try to push your products first.
sure.
You will receive first and things like that. So what we will never know if, for example, let's say Sam Altman or Elon Musk decides to say, okay, if somebody asks best social media platform, I will ask Twitter. If somebody asks like where I should read the best news or the news in the market, the fastest way, it will say Twitter. So we don't know exactly when they can start adding this information, where they can start adding things like you have to, if you're asking, especially with perplexity, for example, that's searching the web, when you're looking for the web, or Gemini that's also doing now, like it will not push you a specific agenda of the centralized company. And this is one of the biggest critical stuff that's happening. And I see guys that are actually now they have the job is to put your company inside of the search of GPT, of Gemini, of Perplexity. And it's not so complicated. And this is
Yeah.
the part that becomes scary. Because in order to do that, what you really need to do is start writing some Reddit lines. You start taking a lot on different Reddits. You start putting on your site more information that's related to your product. Then you have to tag something on YouTube. And then they start learning from that, and as you have a lot of tags and different this type of social media, they start putting you as one of the products that could be relevant on that because you have these tags all over, and they think that this is reputational stuff.
There's a whole bunch of attacks. I mean, if I were trying to do this and I was producing an AI model and I knew it's being used by traders, I might just tweak by 0.1% the if whenever Google was mentioned, let's say I was working for Google, I'd just tweak by 0.1% the maybe the speed at which it gave the result. Or compared to, let's say I don't like Microsoft, I put them 0.1% down. So just adding weightings in a really subtle way could make a huge difference to these sorts of things. So I'm a security guy. I think evil, hopefully to try and do good. But I think this question about open source, not open source AI, I honestly didn't expect it to come up in this conversation. But I think it's a really interesting one. So
Yeah, and that's why, for example, I think that one of the biggest interesting people when they want really to do agents that will work, especially for trading or like
yeah,
specific things, they build it on the open source basis, and they
good.
obviously like they can make it in the close way for them, but they
Yeah,
will use an open source model to see actually which data it was taken from.
yeah,
And then they start educating them based on the data that they want to do it. So you will not have this AI hallucinating in certain moment because he read something new or just new bunch of information came and he just forget about some of the stuff. So all these tricky things becomes interesting when actually it starts to be how you educate your small, specific, precise AI to do the specific thing, and then how you can orchestrate the whole play around. Like it's like a miracle tree of different AIs that on the top you have just one that could be the same as a simple chat like you do on the GPT one, but on the bottom is a lot of different nuances and new small specific AIs that are doing a specific job, and they don't mess with all the other information.
Absolutely. I'm not going to ask you to explain Merkle trees. They're absolutely fantastic and brilliant things, but it's one of those ones that if we start explaining Merkle trees, we're going to be here forever. So I want to say thank you very much indeed, Pavel. It's been lots of fun. I've learned loads of things. I love these conversations. There is one last thing I'd like to do, though, which is that we've never met in real life. Yeah.
Yeah.
So we talked a bit about AI today, and I am really worried about AI and deepfakes. So one of the things that I like to ask my guests is to answer a question in a way that will convince me that you are actually a human being and not a deepfake, because who can tell? So it's not so much what your answer is; it's kind of how you answer it. So here's my question, which is, I'm a British person. I'm a Brit. And why do you think that British people are always talking about the weather?
Because it's shitty.
But I hope that an AI wouldn't say that. That's kind of a good. It's sunny outside. It's really not. It's cold, but it's sunny outside. It was horrible yesterday, but okay, that's fair enough. I'll take that. I think you're probably a human. Thank you very
But
much.
you never
indeed.
know.
I never know exactly.